Good afternoon, chart Spartans. I wanted to give an update on gold and the miners because I'm starting to see some interesting patterns develop which I haven't seen since 2016. Now, I did think that gold was going to break out last year, and much to my frustration it didn't, but the way I understand it now is that precious metals move in sharp impulse moves, and this is on the prospect of higher inflation or news of central bank balance sheet expansion. And that's what we saw in 2020. We saw a sharp impulse move higher. But after that impulse move, precious metals started to price in the prospect of tapering of balance sheets and of higher interest rates. And that brings us to where we are today. We're at the start of central bank rate hike cycles, and we've already seen rate hikes from the Bank of England, and on the 16th of March we're due to have our first rate hike from the Federal Reserve. But if we have a look at the charts, I think this period we're in right now is very similar to the start of 2016. Then we had a low in the price of gold miners, a bit of a consolidation, and a lower low that corresponded with a higher low in the RSI. Now that's a bullish divergence and often a good sign that price is about to turn around. From that point, we then had a 200% rally in the gold miners. If we compare that to today, we've had a low in the gold miners, a consolidation, a lower low, which corresponds with a higher low on the RSI. So potentially we could be in the start of this impulse move higher like we saw in 2016. And if you compare the macroeconomic environments, 2016 was also the start of a rate hike cycle. The Federal Reserve first raised interest rates in December 2015, and then it raised them again in, I think, December 2016. So similar to what we have today, the start of a rate hike cycle. So potentially we might get some headwinds until that first rate hike on March the 16th. But, in the short term, the next month or so, the environment is looking very interesting. Now, if we move over to the gold chart, this is a thing of beauty, in my opinion. We've got this classic cup and handle pattern. And typically when a cup and handle patterns, you're going to see substantial moves to the upside in the price of gold. And there's been many times when I've said to myself, we've got such high inflation, inflation's at 7.5% in the US, why on earth is gold not performing? But the fact is, gold has performed well, and sometimes I miss the fact that, the move from 2015 to 2020 or from 2018 was a significant move. And since then, all we have been doing is digesting that move. Now, we did break above the resistance point last week on the geopolitical concerns, so potentially we could be at the start of that move higher. But I tend to not get too carried away with geopolitical moves because they quite often tend to be flash in the pans. If we do get a little pullback in gold with the prospect of interest rate hikes coming next month, potentially we could move back to this support level here, and then we'd get a 5-wave corrective pattern with A, B, C, D, E. Or we're ready to start the move now. But either way, I'm positioned for a move to the upside, and I think the prospects for precious metals is starting to look a lot better than potentially what it was looking like last year. Precious metals are inflation hedges, so they tend to do well when there is inflation, but they're defensive assets. So when there is slowing growth and inflation, that's the environment where precious metals do better in. When there is inflation and economic growth, offensive inflation hedges work better. So stuff like Bitcoin. So it probably explains why Bitcoin is kind of underperforming at the moment, because growth is slowing and you're seeing the tech stocks underperforming. And with the inflation and slowing growth, that's probably where the precious metals will start taking over the lead. Now I'll quickly show you the silver chart because that's also quite interesting. We've had this, after this impulse move higher, we've had this long consolidation and we're back to the support of the arc. So this is a typical zone where we could start to see a turnaround in the price. Now the last chart that I will show is the gold to S&P ratio. And as we can see, we're starting to see some outperformance of gold versus stocks. We saw this breakout in January. We've had a correction back to the breakout line. And then after this consolidation completes, I think it looks clear that gold is going to start outperforming the stock market. And if I show you the long run version of this, you can see just how undervalued gold is to stocks. Gold is pretty much as cheap as it's ever been. It was cheaper in 2000, but it's incredibly cheap right now. And if we are starting to see a period of precious metal outperformance over growth assets like stocks and your tech companies, then this is a fantastic place to be owning gold. And the runway, if we start to see inflation getting out of control, the runway for precious metals to outperform stocks is quite incredible. So we've got some interesting things happening in the next month, and I'm going to